Lyft is set to make its debut on the Nasdaq today after pricing its IPO at $72 per share. Its $24.3 billion valuation makes Lyft the largest company to list since Alibaba back in 2014 and the first of several Silicon Valley unicorns poised to go public this year. Let's get to Elizabeth for more. Elizabeth, we know how this one goes. If Lyft does well, then we might see a string of other unicorns come to market.
That's right. This really sets the stage not only for Lyft's rival Uber, which is expected to go public in a bit later this year, but also for a string of tech IPOs of companies that have stayed private for a bit longer than expected with these very large valuations, as you mentioned. Now, Lyft pricing at the higher end of the range last night at $72 a share. That will put its valuation at $24.3 billion. So this is a big IPO. Generally, the sentiment around this IPO has been very positive. The IPO was oversubscribed last week in the roadshow. Over $2 billion has now been raised for Lyft. As you mentioned, it will begin trading on today, Friday, on the Nasdaq. The ticker will be, fittingly, LYFT Lyft. The question in the first early trade here will be whether investors can forgive some of the losses, and they are big losses, that Lyft has had over the past years since it was launched. $911 million in losses last year on revenue of $2.2 billion. So Lyft is not a profitable company like many other tech companies that will be IPOing over the next year. And that's the question: when it starts trading, will investors be as forgiving about those financials? So we'll be watching very closely today, trading on the Nasdaq later.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.